Whitney, thank you so much for being a guest on the Tech Guys Who Invest podcast. We're really looking forward to the knowledge you bring to the table and educating our listeners.
I'm thrilled to be here with you both. I'm looking forward to it.
Yeah, thanks a lot, Whitney. We're really excited to have you on. So for those who may not know, because a lot of people who listen to our show are, they're working people, white collar people, business folks who have an interest in investing, but they like their jobs. So they're busy people and they're just interested in investing outside of work. So I know if you're involved in apartment syndication, you pretty much know who Whitney is. But if you're not, you may not know who he is. So Whitney's an apartment syndicator, and Whitney, I think a good question to start off with might be, what does an apartment syndicator do?
Well, that's a good question, and they have to be able to do many things, right? Very few things I would say you ultimately have to do well or excellent. Many things you have to do well, but what an apartment syndicator does, like I said, on a satellite image view, is looks for commercial buildings. Obviously, in this case, apartment buildings, multifamily. Usually not always, but normally 100 units plus. It doesn't have to be, but most of the time it's 100 units plus. And as far as the syndication part of it, you're finding the an elementary level at this. You're finding that commercial property, which normally you wouldn't be able to purchase because it could be anywhere from $2 million to $60 million. It could be $100 million. It could be any number like that. Where most of the time you couldn't purchase that property. Most people couldn't. Very few, right? But as a syndicator, I can say, okay, I found this deal, but it's $20 million. And now I can say, okay, I have, these investors, just like the people you're talking about, maybe they have great W-2 jobs, or they have a great business, that they're really passionate about other than real estate, but they understand the power of owning real estate. And so, and they want to invest in real estate, right? But they don't have the time to take the calls. They don't have time to, look at markets or talk to brokers and establish those relationships and network at all the events and, all these things, do the due diligence and make sure the management's working properly, all those things. And so, I'm going to be the one that's going to put that together. Like I said, at an elementary level, that's what we're doing. We're saying, okay, here's our investors, that have shown interest, in investing in these types of deals or real estate, so they can own real estate, but not have to take all the calls, not have to do all those things, but make a better return than they're going to in the stock market, while also getting the benefits of owning real estate. And then, and we're going to find those deals and make sure they're being managed properly and make sure the returns are happening and those types of things. So we're putting that together.
So basically, you're managing everything in such a fashion where you bring everything together: the deal, the money, the resources, to make sure everything runs smoothly.
That's right. We're making sure all of that happens, making sure it's a good deal, right? Making sure it's a good market, making sure that the management team is qualified and that they're doing their job, and that we're returning every investor call or email as quickly as possible. And it's a juggling game sometimes, but it's all about creating systems and having good people on your team.
Fantastic.
Yeah, it's a lot of work.
Now, for those who don't know the benefits of investing in real estate, or maybe somebody's just listening to this first episode, what would you say for somebody who has a W-2? What are the benefits versus, say, investing in the stock market?
Well, if you have a W-2, obviously, a lot of people invest in the stock market, right? Or mutual funds, things like that. However, this way you can actually own real estate. I mean, you can have the same benefits as far as deferring the taxes and things like that, and having usually a higher return a lot of the time on these properties than you will as investing in the stock market. And you actually own real estate, so you can defer defer passive income from your because of your passive investments.
Yeah, that's a really good point there. And I think that is a question some people have who may not be familiar with this is, if I invest passively with someone like yourself, for example, is that really, am I really investing in real estate? Am I really getting all of the benefits that I hear about people can get when investing in real estate?
Yes. I mean, you actually own equity in these buildings. I mean, you're buying a share, of the entity that owns the property. That's what you're buying. You're buying so many shares, of the entity that owns this property. And so you have ownership. I mean, you get my goodness, it's left me. The K9. No, I mean, what is it you get at the beginning of the year?
Yeah, the K1, right?
K1. My goodness, the name's left me, but yeah, K9. K1, you get a K1 at the beginning of the year. And I mean, you have equity, you have ownership in that property, just like anybody else would.
Yeah, I think that's really valuable what you just clarified there for a lot of people. I really think that is a question in a lot of people's mind who don't have experience investing in this way. So that's a great clarification that I don't hear a lot, on a lot of the other podcasts and things like that. So thanks for clarifying that.
Sure. Now, if somebody has a W-2 and they do want to invest with somebody like yourself or Adam as multifamily investors, what are the things that they should look for in that person? I know due diligence is a big thing, right? But I also think not only should you be studying the property that's presented, but also the person you're potentially investing with. So what would you say are some of the telltale signs of a good investor and a bad investor?
There's so many things to doing due diligence as far as looking at a deal sponsor. And when I say deal sponsor, that's just someone that's really in charge of the deal, right? They found the deal, or their team has, they're the ones that's really operating this whole thing that we were talking about as far as apartment syndication. But there's so many things to look at. But, initially, do you like this person? Do you feel comfortable working with this person? And I just feel like so many things initially can be found out. Almost trusting your gut a little bit initially, not to actually taking it to the bank, but just having some conversations with somebody. Is this somebody that really cares about me, the investor? Do they really care about, are they answering my calls? Are they answering my emails? Are they getting back to me? Are they helping me at all to understand this type of investment? Or was it just a quick blast email? Oh yeah, just a quick whatever, just to try to get you to quickly to invest. Are they really spending time and showing care for my investment, and I really seeing it as a partnership? But then, outside of that, obviously, as you're going to hear from everybody, you want to do your due diligence. You want to check their track record. You want to ask them about deals that they've done or deals they've been a part of. And even doing, I know it's becoming more common in doing background checks on that person, on that deal sponsor. A lot more passive investors are becoming savvy to things like that. Like, I'm going to do a background check on you because I'm fixing to hand you, 100,000, 200, whatever it is. I want to know who you are. I want to know if you just filed bankruptcy. I want to know, who I'm dealing with here. A lot of people can put on a good front, over the phone or even website, things like that. And so, have a few conversations, and I would also say get some referrals, and that's big, get a few referrals, and even Google searches can tell you so much. Check the person out on social media. Who are they hanging out with? Is who they're hanging out with people you would hang out with? Things like that are going to tell you a lot before you go to the expense to even do a background check. But yeah, highly recommended to even do things like that. But ask about their track record, ask about who they are, ask about deals they've done, and get referrals.
Wow. Yeah. Man, those are just some fantastic tips, I think, to help people kind of get more comfortable with somebody that might be getting ready to invest in. So if one of your investors is interested in investing with you on an apartment deal, and you're buying an apartment and they want to learn more details about the opportunity and investing with you, how do they learn about the details of the opportunity and what's going on there with the investment?
So that's a great question. And first, they're going to have to go to my website and sign up to contact us, so I can actually have a call with them. And it's important to understand, it's a highly regulated industry. And so the SEC, they want to know that I have a relationship with somebody before and I'm not an attorney, by the way, but before I, put a deal out to somebody, so I'm not soliciting, right? I'm not, blasting this deal out, saying,
Right.
Who wants to invest? And so, because I'm supposed to have a previous relationship, with that person. And so, I want you to contact me first. And, or if we've talked somewhere, at a meetup or at a conference somewhere, I'm going to follow up with you. And hopefully, I'm going to request that you schedule a call with me, or I'm going to call you, and we're going to talk again. And I'm going to try to have two or three interactions with you before I'm actually going to even show you an opportunity. Okay. And so it's just important that I understand some things about you that have you invested in real estate before or not? And you don't have to have, but I want to at least know that you have some investing experience, or that you understand the risks more than anything, that you understand you're investing, and just like the stock market, there is some risk to investing in real estate, right? As we all know. And so I want to make sure you understand those things before I'm going to blast out an opportunity to you to invest. But as soon as we've done that, then you're going to get emails from me. When we have an opportunity, you're going to get an email that says, new deal, and lays out some details about the market and about the deal itself. And then there, some brief things that, obviously about the returns and things that you need to know as an investor. And then there's going to be links where you can see a lot more details about that opportunity, presentations, and then we're going to follow up with investor calls, and amongst many emails in between us, start coming in, people asking questions, and so we're going to do our best to answer all of them as fast as possible.
So that's awesome that you do all of that, because I know that, and I'm not an attorney either, neither is Adam, but I've seeing a lot of, hey, the SEC is cracking down, so you can't just say, hey, I have a deal, give me money, without knowing somebody. If it's on Facebook, like a Facebook ad, or somebody's promising a return, run. You need to turn around and run away. So,
and they should be mentioning, and we won't go into in depth about this because I'm not an attorney and don't claim to be, but I would say, that should be what's called a 506C offering, where they can actually advertise. But if it's a 506B, then they cannot. And if you see it on Facebook, and people are from one extreme to the other about this, but if you see them advertising on Facebook a new deal to invest in, we'd love for you to partner with us. If you're looking to invest in real estate, blah, blah, blah. If it doesn't probably say somewhere this is a 506C offering, I would run. I would leave it alone.
That's a nice distinction, a detail for people to look out for. You mentioned that you look for 100 units or higher. What's the thought process behind that?
It's the economies of scale. And so it's as easy to do a 100-unit building as it is a 50-unit, or, and after you've done a few, it's going to be as easy to do a 200-unit as it is a 100-unit. And so why not look for a bigger deal, honestly. And so, we can provide more returns, and we can do things cheaper as well once we are, on a larger scale. So especially when we start having, like more than one complex really close by, we can really start leveraging management teams and even other contract services, that will be cheaper because we have so many more units, than we would if we were doing many 50-unit buildings or smaller.
It's like buying in bulk, basically.
That's pretty much. Yeah.
Yeah, that's exciting to even think about for me. So, Whitney, most people think that you need to be rich to invest in apartments. Is that true?
It's not true. There is a difference, in an accredited investor and what we call sophisticated investor now, and you have to understand the difference because that will determine what deals you can invest in. But you need to know that as well. Like 506C, we were talking about earlier, that's only for accredited investors. And that's going to mean you make $200,000 a year, and you have for the last, I think it's 2 to 3 years. I can't remember the exact 2 to 3 or 2 to 5. 2 to 3, I think, years. You've made $200,000 a year annually, or $300,000 a year with you and your spouse. Okay, or you have $1 million net worth, not including your home. So that's that means you're accredited. Okay, so then you can invest a lot, and a lot of syndicators who are even doing 506B offerings will only take accredited investors. So you need to know that up front. And a lot of like when I send that email out, it's going to say, for accredited. If it is for accredited only, it's going to say that in the email. But there's offerings where we'll take, sophisticated or non-accredited also. That's going to be the biggest distinction. You don't have to be rich, but we do want to know that you have some investing experience. And so, one thing to think about there is, let's say the minimum, there's usually a minimum investment. Sometimes it's 25 or 35, 50,000, something like that. But let's say it's 25,000 and you have, $30,000 in the bank. Well, if through our conversation, I feel like you only have $30,000 in the bank and you're fixing to hand me 25, I'm going to say this isn't the deal for you. I do not want to take, your last bit of money. It's risky, right? I mean, it's an investment, right? I have every intention of doubling your money in 5 years. Okay, I do, and that's I plan to do that with everything that we can do. We're going to make that happen. However, I do not. You're much more likely though to if something happens, you need that money. Right. And then you're going to be coming to me saying, Whitney, we have this problem, even if it's something like, my son has got this medical condition we just found out about and we need the money. It's really difficult for me to get that money back to you. And sometimes I can't, so I don't want to be in that position, and I don't want you to be in that position as an investor. Right.
So,
yeah.
So it's as much like them understanding their own situation as much as you're understanding the deal. There's a lot of just understanding what they bring to the table, what they can afford, things like that. So that makes sense.
That's right. It's to protect them to some extent as well. I don't want their last 25,000. It's just too risky.
Yeah. One of my favorite things about you is that you really care about other people. So, I mean, that just comes through in that answer, and it's just really cool. I like hearing that.
Appreciate that.
And you mentioned something about 5 years, and I've seen that as well, or talked to other syndicators, and 5 years seems to be a common theme. What's the idea, at least in your mind, why 5 years?
So, I mean, sometimes it's the type of debt that you have, or different things like that are going to say, okay, we need to try to exit by this time. And then, but a lot of times, the debt like we have on some deals are going to be, 10 years, but we're still going to plan to exit in 5 years. And a lot of times, investors, they don't want their money tied up for 10 years. Some investors do, and that's a whole nother conversation, but really understanding your investors and what they're looking for. That's something else I would be asking in those conversations. Like, what is your goal in investing with us? What is your ideal investment in real estate, passively, right? And so those are some things I want to hear. I want to know, do you understand this is a 5-year commitment, really? And then you can choose to do something else with that money. And so, investors, it's going to be hard to find enough investors, to raise, many millions of dollars, if they're going to have to leave it all there for 10 years or even longer, 15 years, so that way people can change it, can do other things with their money at that time.
Okay. Yeah, that makes sense.
That's interesting. So Whitney, does your company try to hold on to the property for longer than that? I mean, what's your strategy there in terms of how long you like to buy and hold the property as your company?
So we do try to stick to 5 years. That's our plan. That's our business plan is 5 years. And we exit, we sell the property because we can return the most to investors by doing that. And we really feel that for me, I feel like it would be a conflict of interest for me to be trying to buy that opportunity. Say I had another entity and I'm going to buy that from this entity over here that I'm managing where all the investors have invested. At the moment, I can't say I feel good about that personally. And I mean, you can make a lot of money doing that. I mean, and I know guys that do that. But I personally, I haven't figured out a way that I feel comfortable doing that at the moment, because I obviously, I want to make the best returns for the investors. And I just feel like best for all of us, because they're going to want to keep investing. Right. And so, and then I just want that alignment of interest, or I don't want there to be a question, of me trying to, I'm going to sell it lower from entity A over here because my entity B is buying it, and that's just my thought behind it right now. And, but that's why, we plan to exit and we don't hold them after that.
Right. Makes sense.
Now, when you talk about finding a deal, what are some things, and I don't want you to give your secret recipe for what makes a fantastic deal, but what would be things that the bright lights, red flashing lights, like, wow, this is a home run deal?
I mean, initially, you're going to have to understand some stuff about your market. Right. And obviously, location and maybe price per unit, things like that. And some of that's going to, you're going to learn by analyzing lots of deals. Right. And you're going to, even when you think you got a deal, I would say analyze 100 more, in that market that you're looking at. And so, when your broker's sending you something, you can see, okay, is this even anywhere close? Is it even worth my time to really dig into? What's the price per unit? What's the rent? I need to be able to look at it and say, okay, this is, these 2 bedrooms are renting for $675, but I know the majority of the market 2 bedrooms are renting for $825. So what's the problem here? Obviously that's going to draw my attention, right? That's a big, what we would call loss to lease, or, I'm going to say, okay, why are these so much cheaper? Well, then I'm going to say, okay, well, wait a minute. It's a Class C property in the worst part of town. Okay, I'm probably not interested, right? However, maybe there's something there. Maybe it's just mismanagement. Maybe there's some kind of value that I can add there. And if a lot of times it is management, and that's where we can find a professional management team to go in and create that value, really quickly. So initially, I hardly answer your question, but it could be price per unit. Just some initial things.
Right.
Obviously, you might look at cap rate. I don't look at that just extremely strongly, initially. But price per unit. Look at the rents. There's just numerous things that whether it's the age of the property, obviously the location, things like that are going to tell me, okay, maybe we need to dig in a little closer here. And then obviously the returns. After we do some underwriting, can I provide the types of returns to investors that we want to, or that we are going to strive to?
So I don't feel I would be doing our listeners justice if I didn't ask something about the current cycle we're in and how that may affect how you see things. So here goes the current cycle question. It feels like we're at the top of a cycle, even in the commercial space. How does that affect how you're approaching deals?
Very carefully. Right? And I feel that you can make money in real estate in any cycle, in any market, not in any market, but I mean, in any market cycle, I would say. But obviously if it was 2011 or 12 or, whatever, if you bought then, well, you could almost have done nothing and you've made money. Right.
Yeah.
However, guys were smart to get in then though, it did take some skill. I don't mean that it didn't. A lot of smart guys got into real estate then and are doing extremely well now. Because of that timing of the market. And so, yes, and they've been saying for years or the last few years that we're at the top, and many people have sold their entire portfolios, because of that. And are they wrong? Well, I don't know. I mean, the big thing is that I don't know. I don't know. Nobody knows what the market's going to do. But there's some key things that you need to think about. Like especially if you're a passive investor investing with somebody or you're a syndicator buying a deal. Like obviously that you're not overpaying. That you have a reserve budget, and that you have proper financing. And so, just some really key ways that people get in trouble. And so, market turns, whatever, and then all of a sudden your property's worth so much less than what you paid, and now guess what? Your bank notes do, or, the time's up and you have to sell, and so, but it's worth so much less. And so, or the market drops and let's say you can maintain what you have. Okay, we're going to drop the rents to keep it occupied, and maybe we stop renovations so we have no more expenses. Which those things you would do, right, just to maintain, right? Keep providing the returns to investors, and even make nothing on our end if that's what it took, and then to make that happen. However, let's say the boiler goes out, or all of a sudden, I don't know, something crazy happens, and now you have $200,000 expense. Where's that going to come from? And so now in another way, you're forced to almost sell the property or forced to, find somebody else to come in or to buy it or to help or, so just some ways to think about. So like, even though we plan to exit in 5 years, we still get 10-year debt, Smart. So we're not forced to sell in 5 years. So if something crazy in the market happens, let's say in year 4 and we have an exit, so it's possible it's highly likely we'll exit before year 5. And so, but that's the business plan. But let's say the market, crashes in year 3 or 4, and then, by year 5, we're like, no, this isn't the time to sell. We can hold the property till 6 or 7 if we want. Okay.
Nice.
So it's having that flexibility, also having the reserve account, so we can, float that property for a long time, if needed, or if, it's that emergency fund, right? That rainy day fund, just in case, which you can't know everything about the market or about a property. And so, we want to be prepared for that.
Smart.
Yeah, absolutely. And I think that fund, that reserve fund, it's something that I didn't even think about. It just, it would make sense to have that. I was thinking all the money from the investor should be used, which it probably is, but then you thinking about what if something goes wrong, those capital expenses should be accounted for in sub capacity. Now, with these apartment units, you're coming in and you're value adding? Is that a correct understanding?
It is. Pretty much we're raising the value by raising the income.
Okay. And then that's done through like remodeling or something like that, some way that you can justify increasing the rent. You can't just come in and say, I'm a new owner, I'm increasing your rent. Well, I guess you could. I don't know.
Not normally, but sometimes you can. So let's just say that it's mismanaged and they're just under market rent. And so we've run into that before. And so where we can raise the rent and really haven't had to do much to the units, okay, because they are so under market, rent. And so we can raise it sometimes then, but normally we're going to do some kind of light value add, some type of remodeling in the units. That could be anywhere from $1,000 to $5,000 per unit, added in to increase the just the living, maybe from a C plus to a B minus, property, something like that, and then be able to raise the rents to increase the value.
Awesome. That makes a lot of sense.
So I'd like to switch gears a little bit. Whitney, we know you educate people who want to be active investors and syndicators on your podcast. You have a really popular podcast, and I'm curious what you enjoy most about your podcast.
That's a good question. And I would say it's meeting the people.
Yeah.
It's got to be the networking component of podcasting is amazing. And so, because we've done about 200 almost 50 interviews now, and it's all these people I wouldn't have met otherwise, or some I would have. I've met at a mastermind or events and conferences and stuff. But normally, before I even go to the conference, I've met, if they're somebody high level like that, I've met them. I've had them on the show even before I've got to the conference. And so, it's that networking, that component that, so many of these people I would have never met outside of the podcast. Yeah,
that's awesome. And being a daily podcast, which I still can't believe that you have a new episode every day. You just have the opportunity to meet so many people. That's great.
So with the podcast, I believe Adam and I are firm believers in grabbing information from things like podcasts. If somebody's interested in becoming an apartment investor, how would you recommend they start?
That's a good question. And I get the question probably 3 times a week. How do I get started in syndication, or even just how I get started raising capital? And that's a loose term a lot of people use, raising capital, but
right.
But most people in the industry understand what that is. And but you can partner own deals to get started. And most of the time you're going to find, you're going to need to find a mentor. I can't recommend it enough. But it doesn't have to be a paid mentor. And if you do find a paid mentor, find somebody that you have contact with, that you can reach out to, that's in the industry right now, that's actually out here doing this, that actually has boots on the ground. They're making deals happen, things like that. But somebody that you can talk to. Somebody that you get to talk to. And so, but find a mentor, and that could be the person that maybe you're going to start raising capital with and partnering with. And so, when you go to start talking to investors, well, that can be pretty intimidating at first, right? If you've never syndicated a deal, you've never raised capital, those questions, you're worried about the questions that they might have. And of course, just like I was telling you to ask, they're going to ask, well, what kind of deals have you done? What have you,
right.
Blah, 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 right? So all those things that, you're not going to have the answers for as far as your own track record. And so when you're partnered with somebody that has that track record, well, all of a sudden you can say, well, yes, our team has done this many syndications, or our team, does this kind of deals in this market, so forth. And so, that's where you're gonna use their credibility to get started into this business. Because most people, unless they're, a family friend or a really good friend, they're not going to hand you $100,000 to invest in your first real estate deal. Not normally. Sometimes that happens, but it's rare, right? And so, you're going to use that mentor, or you're going to use somebody that you're going to partner with that's very experienced, and that's going to give you so much more confidence when you have that person that you can actually answer questions to, or ask questions to, and get some of those answers. It just gives you more confidence, and gives you more confidence when talking to investors.
Yeah, that's great advice, to find a mentor. And I think that's actually daunting for some people and challenging for the rest of them. Especially if it's someone who is brand new to this and they're just learning about it. Do you have any things that come to mind for someone who may be looking to find a mentor, maybe something they could do when they're trying to identify one or work with one to, help them get noticed without coming off as like creepy or,
Yeah.
awkward even.
Like, hey, I know every detail about all of your investments.
I don't think it has to be extremely complicated. Obviously, there's paid mentorships, and you don't have to know them ahead of time. I would prefer you get to know them somehow or know of them. Get some referrals, meet some people that are in their coaching program. I would say get on Bigger Pockets and do some research about that coach. I did that, but also when I found out people that were in this coaching program or in, many coaches programs when I was getting started, I reached out to them in Bigger Pockets and said, hey, would you mind to take a phone call? I'd love to hear about your experience with this person or this coach. Right. And so, you're going to get some great feedback there. And, and you're not even going through that coaching program to get referrals, right? Because obviously they're going to give you the best ones or top guys, but actually go through Bigger Pockets or some other platform and find somebody that's actually in that program. And if you just search on there, you're going to find people talking about that program most likely. But like I said earlier, find somebody that's actually in it, doing it now, and somebody that you can talk to. There's so many gurus that have many coaches under them, and that's who you normally talk to, and you actually get to talk to that guru maybe on a conference call once a quarter or something like that. It's not personable at all, and I don't like that personally. But it doesn't even have to be paid. You can find somebody locally that is doing what you want to do. Find them and try to find out some stuff about their character and things about that. Make sure it's somebody that you would even help or partner with, and then find a way to add value to them. And I would say it can even be something as simple as sharing their stuff on social media or liking their posts or commenting, some things like that just to get started. Just guess what? They're going to notice that. They start seeing your name often, right? I have people that do that to my show. Guess what? I know what their name is because I see it often. It's so simple, right? Just share it with your network. And guess what? I know who this person is. And am I going to take a phone call from that person? Well, probably.
Yeah.
So just something that simple, but learn a little about their company. Look up their website and read a little about them. Go to LinkedIn and learn a little more about them. If there's some kind of skill that you have that they need or that they could benefit from, that's great. And if you're in a position to be able to work for free, do it. Offer to, and not everybody is, and I understand that. And I wasn't, when I started syndication, I couldn't do that. Obviously, I had a family that I have to support, right? But if I could have gone back 10 years or maybe a little longer, I would have, I would have really tried to have done that, to have maybe had that night part-time job working at night and help work them during the day for free. Because that person, if you work for free for them for a year, you're going to be so much further ahead than you ever thought you could be.
Yeah, man, that's fantastic advice. Great actionable tips. I hear a lot of find a mentor and some soft kind of, but man, those were some really good actionable tips.
Yeah, and I think there's something to be said there about time. What I've noticed with investors is they value time at such a high level. So if you can find some way of basically maximizing their time a bit more, that is instantly adding value to them.
It's the mindset, right? It's like, how much can I get done today? And just that, of having to push. Well, I have to be very intentional. We have to be very intentional with our time, right? I've never been so attached to a calendar, You're so right. It's just because we try to be, it's just the way we think is, and you all too, like you want to be as productive as possible, right?
Yeah.
So, being lazy is not really, it's just not an option. Right. So, or I try not to let that be an option. So yes, time is very important.
So, Whitney, tell us about the Bigger Why. What's your charitable cause?
I appreciate you asking. And, we love sharing about it. And our big why is helping families adopt children. And so my wife and I are in our third adoption process now. And I tell everybody, it is a roller coaster. It is not fun. By any means. And we're in the thick of it for the third time now. And so,
wow.
but what I say, and it's extremely expensive. It can be $40,000 to $60,000. Most people have no idea that can be so expensive. It's a shame. it's very frustrating that there's 160 million orphans in the world, many dying from things like diarrhea that we can cure with $1. But it's going to cost, us 40 to 60 grand to be able to bring one home, and give it a family. And so, but anyway, it is a roller coaster. It's very difficult. There's very few ways for the adoptive families to feel like there's somebody on their side.
Sure.
Okay.
Right.
And so because the children obviously but more so even birth mothers that are adopting, which they need people on their side, and that's great, but there's not many people that are really helping the families. And so, but especially financially. And so I tell people, it could be 40, 60,000. They're like, Whitney, that's more than I make in a year. There's no way we can pursue that, And so we're committing 50% of our profits to helping those families. And so we want to help,
nice.
We want to help them financially, come along beside them and help them even with fundraising, and also help them, just from our experiences. And so we've done international and domestic, and our families have been extremely blessed. Like I said, it's a roller coaster, but it's well worth it. And it's a blessing, to bring these children home. And so, I just encourage anybody that's thinking about it too. You're welcome to reach out to me. And my wife and I get on calls with couples often, that I meet in this industry too. When they hear this, they're like, "Oh, we've thought about adopting, and we'd love to have a call with you if we can help or answer any questions from our experience."
No, first of all, that is awesome. That is admirable. We really appreciate you sharing with that, and that is a really cool thing to change it from the perspective of helping people that really want to adopt. Do you mind if I ask why or how you came to that big why?
Sure. So, I guess long story short, my wife and I had never even thought about adopting. It had never even entered our mind. And we were at a church one night, and a pastor was talking about, caring for orphans and widows, and he and his family had adopted some children. And so on our way home, my wife and I were talking about that. And the more we talked about adoption, it was more of a question of why would we not adopt instead of like, why should we? Like, why would we not do that? Why? We couldn't think of a good reason why we wouldn't. And so within a week's time, maybe it was good that we did it really quickly, probably before we had a lot of time to think about it, right? So within a week's time, my wife turned in an application to adopt from Ethiopia. And with it, 2 years, took 2 years to the month, our first son came home from Ethiopia. And, that's a whole big story in itself. But anyway, we're thankful that he's here, and, he came home, and he's healthy, doing great. And he's just a real blessing. Lord has just done a miraculous work in him and our family. And we started the process pretty quickly again, not quick enough, but pretty quickly again, brought our second son home about 9 months after we started that process. And then, now we're in the process again. We've been in the process now for about a year and a half. But that's how we got into it. That's how, we first started thinking about adoption. And then just the need and just the struggles that we've had through this adoption process, especially, that you wait for a year or longer. They tell you, you finally get the call. If you can imagine the emotions, you finally get the call that you've been matched. And, almost within the same breath, and the day after Christmas this time, within the same breath, they tell you, okay, we need $25,000, within this amount of time, and that's only the first half of it,
right?
Or the 2/3 of it, or something like that. And so, you can imagine, it just like takes the wind out of your sails, right? So anyway, we want to be able to help those families, and we help them commit, that want to adopt.
Yeah, that's amazing. It's really inspirational.
Investors also get to play a bigger role, in something bigger than just apartment buildings, or they make the same returns, but however, they know they're helping us in this goal, in this mission.
Yeah. I mean, it's great. So if others wanted to do something like that, like say those listening to this podcast are inspired by what they just heard from you, and they think, I have something that's really special to me that I would like to support through my business. Do you have any tips or things they might consider to make that happen?
I would say, really commit to your why. And I would back up just a little bit to say, not too many years ago, when I heard people talk about your why, or I heard people talk about, you gotta have a strong why. And if I'd heard that again, I almost got up and left the room. Like, seriously, let's get to the meat and potatoes here, folks. Like, quit telling me about getting a strong why, like tell me how to buy an apartment building. And so, or mindset, all those things, which is extremely important, but now I really have a better understanding of, why your why is so important. And so it's really, how we've become, much more known, more faster than a lot of people too, just because we're so committed to our why, and people remember me because of my why. And so even having those conversations at networking events, initially, like, people remember me because of our why, and because we're part of something bigger. So, don't make it complicated, but establish what your why and what that is, what your mission is, outside of just, having a vision board of a new Lamborghini. That's just not me at all. And so, people say, you vision it and have it up on your wall. And I would say there's things a lot bigger and more important than that.
Agreed.
I love it. And this might be just to touch on that why. I love that you are so passionate about your why. And it's really inspiring to hear somebody running with that. Not just this is my why, but you're taking massive action to fulfill that and using it as a spearhead to light the path, if you will.
Yeah.
How did this just stumble onto your lap, or is it something that you actively thought of? I know you and your wife were talking about it, but did it just click, or did you ask a series of questions? How did you come across that?
The why?
Yeah, correct.
I just think it's something the Lord gave to me, honestly. I just think it's something that we just knew we were supposed to do. And that's why we pursued it, honestly.
Nice.
There you go.
So what's kind of your longer term vision for this, Whitney? Do you have a vision about what this may grow to? Like in 5 years, how will you have changed the world because of this?
Obviously, we want to help as many families and children as possible, and on the apartment side, we're growing that as fast as we can. Obviously, still doing the podcast and pushing that as hard as we can. We want to be buying as many apartment buildings as we can, as smart as we can, networking with investors, all those things. On the vision of our why, we would love to help 1,000 children be adopted. Or help those families, bring those children home. But we would love to be able to help those families through the entire process, even knowing what agencies, are preferred, in our opinion, or things like that, to help protect them as well, through the process.
Fantastic. I love that you've got the vision for the next 5 years as well. And to switch gears once again, we wouldn't be the tech guys who invest if we didn't ask you about your favorite piece of tech. So what was your favorite piece of tech growing up, maybe as a child or as a teenager?
That's funny. You and I, we had laughed about that a little bit. But growing up, I didn't have much tech. I didn't have video games. I didn't have any of that stuff. Computer was I remember sitting upstairs on a desk and hearing the dial up, and I was, I don't know how old I was, 16, 15, I don't know. And it just wouldn't hardly work. It just wouldn't hardly do anything. So, we gave up on that machine. And anyway, couldn't do anything with it. The first thing that came to me when you asked me that was the snake game on the old phones. I don't know, about 16 or 17, and you finally got this cool Nokia phone, and it had the snake game on it.
Nice.
Where you could change the plates, change the different colors on the phone.
Well, it's I don't know, what you use, 2, 6, 3, 9, and you could tell the snake to go and try to, whatever it was, but that was about as advanced in technology as I had at the time. We just didn't have, I didn't have a laptop and the fancy cell, all that stuff hadn't come out yet. But as far as tech in high school, that was about as fancy as I got.
Nice. Old school phone games. Good stuff. Well, Whitney, it's been a pleasure having you on. You've added so much value to our listeners. Now, how can folks get a hold of you? And, I'd really like to ask you about how they can get a hold of you, and also any information you can provide around around that charitable work as well, if that's different. What's the way to do it?
I appreciate that a lot. And the best way to get in touch with me is Whitney@lifebridgecapital.com. You're welcome to email me. I'll even put out my phone number, 540-585-4338. You can text or I prefer you text me, say, are you available or something like that, before you just call. But anyway, you go to LifeBridge Capital, sign up for our newsletters, and, you can go to contact us page and sign up as an investor, and I'll reach out to you personally. And then obviously the podcast, the real estate syndication show, you're going to hear about that on the website. But as far as our calls, the biggest way right now, it would be to contact me. We're in the process of actually getting the nonprofit side established at the moment. And so, I'd love to talk to you about that. I have people now that would like to give to that. And if you're one of those people, we'd love to obviously talk to you about that and just our mission and have you be a part of that.
That's great. And we'll put all of that in the show notes as well.
Great. Thank you.
Thank you so much, Whitney, for being a guest on the Tech Guys Who Invest podcast. We're really looking forward to sharing this with all of our listeners.
Yeah, thanks a lot.
Thank you all. My pleasure.